What's going on, my friends? Happy hump day. Hey. All right, it's crazy market. Crazy market. Try to break it down for you. What's going on? What should we be doing? Particularly people in the industry. If you're a realtor and you have a lot of listings, you're murdering this market. Housing market is super strong. I'm going to go over some of the stats there that are kind of mind-boggling. It all makes sense when you put the pieces of the puzzle together, even though rates have been going up. We have seen in recent days, rates have come in, and we're going to do a live rate look today. So I'm going to pull up rates live here at the end of the day. Wednesday's a good day to do that. We'll pull up interest rates. We'll look at a few different scenarios, and I'll show you just kind of like, hey, here's what it looks like on the wholesale side. We'll look at conventional FHA, VA, conforming and high balance, and we'll just kind of keep that. Actually, we'll look at jumbo as well. We'll look at jumbo too. And so just kind of on that front, actually, before we get to that, we're going to do that in just a second. Got some decent news there today. Not crazy good, but it is what it is. So tomorrow, for my industry friends, if you are in real estate, is the grand opening of the Hive, which is basically an event studio space at the Real Talk Media Studios in Sorrento Valley. That's been going on. It's an open house tomorrow. Need to RSVP though. So look it up on Eventbrite. This is what it looks like. And it's, drinks and appetizers and just a good time. I'll be there from 5 to 7 p.m. Tomorrow, hanging out, talking real estate, doing what I love to do. And we'll be talking about some of the cool stuff that we're going to be doing in that studio and in that event space in the coming months and years. Very exciting stuff regarding that. And then we'll just look at quickly here. Yesterday, if you follow my reels and whatnot, I was talking about this particular chart formation right here. It's called a tweezer bottom. See, it looks like tweezers right there. See that? Tweezer bottom. I said, hey, this is one of my favorite formations to trade in the markets for technical analysis purposes. We should see prices go higher. And we did see that today, 61 basis points. That's about 0.2%. But you can see on average, we only gained about 0.1 to 1.2% on rates, which basically just means that banks aren't giving you the full amount of this move. And we saw that the last time we had a big green candle, and they were right. So they're not giving us the full. We need to string together a couple, 3 days like this, and you'll really see rates start to move lower. But we'll do a live look later at the end of the show, which won't be too long. This will probably be a 20 or 30-minute. We'll look at live at rates. It's a few things I want to talk about. Number one, okay, so we did the Hive. Mortgage demand has dropped to a 28-year low. And this is accurate. Now, there's lots of hyperbole in the headlines on CNBC and stuff like that. So it's hard. It's like the boy who cried wolf, right? You don't know when to believe them. This is actually true. Mortgage demand has decreased significantly. In fact, this is the least busy I've been personally in a really long time. And some people get scared by that. I'm just prepared for the ups and downs of this business, always working on it, always trying to improve the process. If you get time where things are slow, try to work on sharpening some of those things that you don't have time to mess with when things are busy and things along those lines. But for purposes of, if someone out there has been watching this show or keeping track of my content and you're like, I'd like to use him as my mortgage guy, but I think he's probably too busy for me. I am not too busy. And so if you have mortgage needs and you want to get hooked up, I would love to help you with that. And we're licensed in a bunch of different states. So Texas, Florida, Colorado, Idaho, Arizona, Tennessee, see if I'm forgetting one, Washington, Georgia. We have a bunch of different states. We have a bunch of different ones coming too, Virginia, North Carolina. So if you're seeing this on YouTube from all over the place, hit me up and I'll hook you up. That's how we do it. Hit me up and I'll hook you up. Here's something that's important. Foreclosure inventory. So how could the market continue to soar like this, given the fact that mortgage demand is down so much? Remember that there's two pieces of that equation, supply and demand. Supply has dropped. Demand has dropped. Demand has dropped more than supply. That's all that's happened. Let me see if I can get this better visualization. So both have dropped, but supply has dropped further than demand. And so, the demand is still outpacing supply. And as long as that's the case, the market will remain strong. It doesn't matter what interest rates are. Now, could we get to a point where you know, where supply starts to outpace demand? We could. And you'll know when we get there, because that's when home prices will start to go down. Data came out yesterday, and year over year, home values across the nation are up 2%. So year over year, up 2% in the face of this rise in interest rates, which is bad for a lot of home buyers are getting defeated in this market. A lot of investors are getting defeated in this market, myself included. It's tough. It's tough to be a buyer if you're financing here and just make it make sense, making it pencil. It's tough, very tough. So it does make sense why a lot of people are exiting stage left. But the problem is that's just kicking demand down the road. It's pushing it down the timeline to the right. And that will create the next boom. So when you wonder, like in a year from now or 2 years from now, when rates are back down and there's this insane demand and the market goes completely bananas, how is that possible? Why is this going so crazy now? It's going to be because so many people have put it off. So many people have pushed to the right. And that's what I mean by that when I talk about that. So you've got foreclosures hit a 15-month low. You've got a lot of things in the inventory space, new builds. This is a really important metric to track. And you get tons of really good information, by the way, from the Redfin blog. I mean, just tons of great data. There's so much amazing data. Metros where new construction is the most prevalent. Okay. You can see, so there's more inventory being injected in those particular marketplaces. And when you have metros where new construction is least prevalent, okay, where it's least prevalent, look at this, San Diego on the list, right? Honolulu is the least prevalent. San Diego, second least, tied with Pittsburgh. So we have the least amount of new construction inventory here, which is the markets that have the least amount, that are the least prevalent for new construction. Those are markets where you're probably going to see values remain stronger or longer if we continue to see rates stay higher like this. It just makes sense. That's part of the equation when it comes to supply and demand. So and there's some really good information on this. I'm going to post these all on the all these links will be posted in the YouTube description. But this is really, there's a ton of good stuff on here, but this is just the one thing that I picked out from this particular blog. And you can look at a bunch of different things here with regard to the percentage of homes that are selling, which are new construction, has gone up, even though new construction is down. And so it just tells you the whole story, which revolves around inventory, of course. And so what we have is a market where currently buyers are being scared off. But when I look at the offers that my buyers have written just in the past week, we're getting beat. We're not even getting countered in some cases. Not even getting a counter, but we offer full price. Hated it. Oh, shoot. Oh, I got on loop. I did hate it that much. Not even getting a counter, offering full price, y'all. So, the market itself, and I have people asking me to run numbers every day. Hey, this is here's the situation. Can you tell me what the numbers look like? Here's the situation. What would the rates look like for this? And it's pretty brutal. There's a lot of payment shock out there. So financing is tough right now. Financing is tough. And can we guarantee you that rates will go lower in the future and that you'll be able to refi? Cannot guarantee that. That's what we expect. That would make sense. But we don't know that for sure. I expect that. We don't know that for sure. And buyers are right to question that. If you as a loan officer say, hey, when rates drop, you're in finance, and they go, hey, you don't know if rates will drop. True. We know historically that's what we can expect, but we don't know for sure. So you always want to get yourself into a payment that you feel is appropriate. The 2-1 buy down is still by far the best program to take advantage of in this marketplace. Difficult in San Diego to get that credit from the seller, though. It's really difficult. If you are a 2-1 buy down buyer, or if you are a down payment assistance buyer, you have to kind of look at homes that have been on the market for a month or more. You got to go find one that doesn't have an offer on it. That's not going to be the best inventory. It's just not. But that may be where you have to hunt. If you're getting down payment assistance, or if you need the 2-1 buy down to make the payment make sense for you, you believe that interest rates are going to go lower, so you're willing to take the chance on the payment getting to its full, calculation on year 3, then, that's something you may want to take a look at. Now, today, the market, as we saw, the bond market popped 61 basis points, big up candle, but really the whole market popped. I mean, if we look at, let's go to a daily. Huge green candle here for the S&P. The NASDAQ also up 239 points coming off of these lows here. The Dow, was the Dow down? The Dow was down 40 points. Bitcoin up a few hundred. Ethereum was up. Dollar index was down. Tesla was up $3 and also got, $3 in post market. So NVIDIA is who reported after the bell today. And so I want to say a couple things about NVIDIA and a couple things about the stock market. So NVIDIA is making these, computer chips, they're AI chips. Elon Musk has tweeted out before that we will literally buy as many as they can make. We have a standing order with them that we will buy all of them. So there is extreme demand. Are these guys the only ones making this or something? Like, I don't understand. Isn't there competition? Do they have some sort of monopoly on this? But they're definitely the front runner. And so they're murdering it, $10.3 billion in revenue in the quarter, which is up 170%. Wow. 171%. And they say that sales will jump 170% this quarter, which is driven by the demand for these AI chips. So a couple things. NVIDIA, if we go and look where this thing closed today, up $14, also known as 3%. But in after hours and post market, it's up another 7%, another $30. Going to be trading in the 500s tomorrow. So you might see this, you might hear about this. I would be very cautious about just like going and buying it tomorrow if you want to invest in this stock. Maybe put some bids in, down lower. It's volatile. So when the market sells off, you probably get your bids filled. Just be careful. I don't think it's a bad idea to invest in it necessarily. It's a high flyer though. I mean, if you look at where it's come up a lot. If we just go back to where were we down here? This is less than a year ago. It was at $120. Okay, so it's going to be opening at 500 something tomorrow. So just be careful. Be careful on those ones that are up so much. It seems like a good idea. It seems like it makes sense. Everybody's trying to make money in the market right now, and NVIDIA looks to be one of those stocks that's going to continue to do very, very well as long as there's this AI boom that's associated with this particular company. The stock will probably do very well. So if you want a piece of it, though, I would not ape in the day after an amazing earnings call unless you just started with a very small position. Hey, I'm going to buy 5 shares, and then I'm going to buy 5 shares every week until I get to my 100 shares that I want to have or whatever. Just average in. That's my only advice on that. It's not financial advice. Just be careful. Talk to your financial advisor. Now, so am I getting a call from my girlfriend here? Spam likely. So Meta, Tesla up. Something's cooking with Bitcoin. Not exactly sure what, but something's cooking. It looks like BlackRock has been accumulating. We just found that out today. They own like 12,000 coins. Robinhood has accumulated $3 billion worth of Bitcoin this year. Robinhood, the company, has accumulated $3 billion in Bitcoin. So this support's still holding right here that we pointed out back when we had the big sort of flash crash on whatever day that was, last Thursday. Flash crash, that is held, seems to be bouncing off that. We'll see what happens there. Something's going on there. Something's cooking there. Maybe ETF approval will be coming soon. I think Ethereum ETF is going to happen first. Those things are all possible. Let's see what happens there. Now this week, next couple days, we got Jackson Hole happening for the Fed. And the Fed is really something that everyone needs to kind of understand here is that the success that we may be having in the economy, we're going to get jobless claims tomorrow morning as well. Any success we're having in the economy, any resilience you're seeing in the stock market is all in the face of the Fed trying to knock it down. So just know that the Fed is essentially never neutral because they're constantly tinkering and messing with the markets. And because they're doing that, they're never in a spot where they're just like hands off, where just let you do your thing, because they're pushing it this way and then they have to pull it back that way. And what I mean by that is they stimulate the economy. Okay. So when they were buying bonds, when they were printing money, lowering interest rates, they were stimulating the economy during COVID. They believed it was necessary to avoid recession, et cetera. So they're pushing the economy forward. Then when inflation gets out of control, they have to pull the economy back. Now, I'm not saying that they're trying to crash the economy. Okay. But think about it this way. If the economy is a car that's moving forward, the Fed has a lead foot. When they want to stimulate, they're smashing the gas down all the way. And then when they want to stop that, when we get going too fast, they smash on the brakes. It doesn't mean that they want to come to a complete stop necessarily, but they have to slow down. So they have to hit the brakes, which means in this case, to complete the analogy, they're trying to slow the market down. They are trying to actually hurt the market on purpose. They're purposefully, that's why I've been calling it a managed decline. They're trying to slow growth down because that's the only way you can fight inflation. And so we have the Fed against us here, selling bonds, raising rates, making things a lot more difficult on the economy. They're doing it on purpose. They have good reasons, they believe, to do this. They think that they're doing a great job. We should thank them for their efforts. I think they should just get the hell out of the way, personally. Stop messing with it. You know, once you start messing with something, you kind of have to keep messing with it. You can't just leave it alone anymore. They need to just walk away. Leave it alone. Only come out if you're really needed. Because when you do come out, whatever it is that you do today, you're going to have to counteract it tomorrow. It's turning the Titanic. Nothing has a small impact. Everything's macro. And so they're constantly in this flux of stimulating, slowing down, stimulating, slowing down. They need to just get the hell out of the way. But they won't. I promise you that. So tomorrow they're going to start a 2-day meeting, and then we're going to hear from Fed Powell. Actually, they're meeting over the weekend. That's right. They arrive there tomorrow. They'll do some interviews, and then on Friday, Fed Chair Powell will give his opening speech. So we have a couple things. So jobless claims tomorrow, Fed Chair. If they start talking about, taking their foot off of the brakes a little bit, and hey, we're not going to raise for a while. Hey, we're going to just see what happens. We're going to sit back and relax and see what work we've done and how it's going to unfold before we do anything else. That would be bullish. That would be bullish. That would be good. And so we kind of want to hear that. We don't want them to say some of the things that we've been hearing lately, which is, we might have to keep raising because inflation just isn't where we want it to be yet. Mind you, if it weren't for housing, and I do believe that the Federal Reserve is attempting right now, part of their mandate here, part of their objective is to hurt the housing market. I truly believe that, because if you look at the inflation data and you take housing out of it, they're really not far at all from where they want to be, 2%. But with the housing data in there, and of course housing data has to be in there, it's one of the biggest components, they're not where they want to be. So really it's just the housing market that's the problem. Now, a bunch of bow tie guys, intellectuals, academics sitting around a table, they're going to know that. They're going to see that. If I could see it, they can see it. They want to slow housing down. They believe that the best tools that they have to do that are to raise interest rates, and not talking about just the overnight lending rate. I'm talking about selling bonds. They have tons and tons of bonds on hand, and you'll notice how systematic the selling of these bonds has been, particularly since we got to about, what was that, in May or so, the selling of bonds from the start of May has been very systematic. It is particularly correlated with the main moving averages, not been able to crest the 100-day moving average. A lot of selling taking place at the 50 and the 25-day moving average, which is super, super bow tie guy-ish. Reeks of Fed. And so just selling bonds, selling bonds, selling bonds, which increases mortgage rates. They don't need to raise the overnight lending rate. They don't need to raise the federal funds rate. All they have to do is sell bonds, and that raises mortgage rates. And the more they hit it, the more they knock it down, the higher interest rates go. They believe that's going to slow the housing market down. The reason this is dangerous, and this is why I bring this up, is because if that's true, that's right, it's just my theory right now, but if it's true that they're aiming at and that the real estate market is in the bullseye of the Fed, they'll keep going. You'll notice the planting that's taking place. There's been a serious planting. Let me do something real quick. I have this story. I just need to pull it up. Mortgage rate surge, entering closer to 8%. There's been a lot of talk lately. I don't like to use the word psyop, but they do like to plant stuff in your brain before they do it. It helps eliminate shock, gets the shock out of the way before it actually happens. And you've seen a lot of things about 8% mortgage rates. Does the Fed believe that they need to get mortgage rates to 8% in order to slow the housing market down so they can get the inflation numbers where they want it to be so they can say they've done their job? That is a question. That is a question right now that may be difficult to answer. So if we do continue to see pain in the mortgage finance arena, particularly with regard to higher interest rates, at some point, it does have to have an impact on the real estate market. It just does. It has to. We don't know exactly where that place is, but it's somewhere in there. And so as supply stays super low, it allows the market to get by without an impact from these higher rates. But somewhere in there, we're going to see it hit. We just don't know where. So I think we got to pay close attention to what the Fed says, with particularly with regard to housing. So I'm going to actually listen to all this and read the transcript and see, and I'll report back on it. Hopefully Friday, I'll make another video. Going to be on TV Friday as well. We're recording it at like 10:30 in the morning, but I think it's going to go on the air later in the evening. I'll find out for sure, and I'll post about that. On TV, we're going to talk about housing, going to talk about financial markets. I'm not sure exactly what they're asking me, but probably about a lot of the things we're just talking about right now. And so should be pretty available in the afternoon on Friday to make another video and go through that. That's the thing I think we have to watch out for right now. It's just the Fed. It's just the Fed. Everything else is working in the favor of the real estate market. Demand is insane. Supply is non-existent. Builders can't get enough lots to build on. We should have a raging real estate market right now. We don't, which I think is actually good. But the problem is buyers don't see it that way. Buyers see the market as being terrible right now. They'd rather pay $100,000 more and get a 3% lower interest rate. That's just the way buyers are. So good luck convincing them otherwise. All right, let's do live rate look here. Let's do a rate pool. We're going to look at, we'll start with, we'll do conventional, VA, FHA, and jumbo. And I pulled rates earlier today, but this is all fresh for me too, because it's been many hours and things change. So we're going to use 780 credit. All right, for our conventional, we're going to start off with conforming balance. And I always do minimum down payments on these. Of course, if you put more down, then your rates will be better than this. All right, and we're going to do fees in. So that means no lender fees. Looking at detached. I'm not going to break it into condos. Condo rates are going to be a little bit higher, but lately that delta has switched a lot, and actually condo rates are the same pretty much. All right, so 7.375 with Penny Mac there. 7.25 cost you $923. So for me, I would probably, in this market, I would quote 7.25, and then I would cover that 900 right there. 7.25 is like you can chew on that, right? Like it's not horrific. All right, now let's look at high balance. You know what we're actually gonna have to do? We're gonna have to look at high balance arms too. Adjustable rates have started to come back. And what I mean by that is not that they ever went anywhere, but that they just didn't make sense. Adjustable rates just don't make sense unless they're at least 0.25% lower than the fixed, right? Did I do this right? What did I do wrong? 95%. Oh, wow. That's high balance. I thought I was off my rocker. 8 something percent? What? Something's not right with that. Occasionally this thing flips out. Let's see if it'll pull up arms. 95% LTV. I know that's incorrect, but maybe it's because the 5% down. That's what it is. So you know what we're gonna do? We're gonna do 10% down. No, that's gonna put us at conforming balance. Okay, let's do this. So 5% down, 5% down, high balance, conventional rates are garbage. 5% down. That's it. Rates are in the 8s on that. This is all wholesale stuff. So different banks may show different things. Provident, it says okay. Yeah, Provident's got some good arms. 7.5 on the arm there. High balance arm. Let's see what the fixed looks like. This is with 10% down now. Then we'll do VA, FHA, and then jumbo. Look at the fixed on that. In the 8s. What in the world? It's just bananas. Okay. Well, that's conventional. Now you can see why. Now, FHA has become a lot more popular, and rightfully so, just because fees were reduced, MIP has been reduced, PMI is better for people who are actually putting some money down beyond the 3.5%. But I'm just going to do a 3.5% down. So let's see, what's 3.5% down? That'd be 32, so 768, 4% down. Okay, this is high balance FHA right here. 6.75. Night wholesale's even got that matched. Yeah, 6.625. See, like in that situation, I would cover this. What I'm doing right now for a lot of people, even though our comp is so very minimal, just because I know how brutal the interest rates are, like when it's under $1,000 to get the next rate down, I'm just covering that for people. So 44 to get 6.625. So FHA, high balance, 6.625. Now let's check the FHA conforming balance. See if it's any different. It's not as bad as it sounds. A lot of people think it's just like off the charts. And this is no lender fees, by the way, on these. So I've got fees in. You're not paying a lender fee here. Yeah, 6.625. So FHA, a solid 6.625 across the board. Let's check VA. Should be very similar. We're going to do no down payment VA. $6.75. Orion's been winning the game lately. And so on that one, again, I would cover that and go down to 6.625. So that is conforming balance. Let's go high balance. Really, to get these rates with FHA and VA, you really just need a 640 score. That's another reason why conventional is a little bit out of favor at the moment. Not only are the rates really high, but you also need to have really good credit score. Like if you have a 719 credit score, that hurts in what you're able to get quite a bit. Okay, so 6.75 Unlock Prime came in here. Top of the morning to you. That's kind of an anomaly rate sheet right there. Let's look at Orion here. Yeah, 6.75. So 6.625 for VA conforming balance, 6.75 for high balance. Those are no points right there and no lender fees. Now let's look at jumbo. So this is going to be loans over 980, basically. You're going to want 20% down on these. So let's see here. Make it easy on myself just from a math perspective. Down. Let's look at fixed rates and let's look at arms. The jumbo arms have actually been pretty decent. Okay, we're going to do fixed rates first for jumbo here. The whole point of this is just transparency. Look at that bananas eights. Yikes. Okay. Let's look at arms. 6.85. First Citizens coming through. They always have the good jumbo arms. Yep, 6.85. So you could do a jumbo arm, 6.85, dramatically better. So that's a 5-year, by the way, 5-year, 5.6 arm. Dramatically better than high balance conventional fixed rates or jumbo fixed rates. So that's a huge advantage. So if you really look at this, 7.25 for conventional. Here, let me just pull this up. I got my sticky over here. Let's just update this. Okay. VA was 6.65 for conforming balance, right? And 6.75 high balance. FHA was 6.625 across the board. Conventional 7.25. And then the high balance was 8.37. I want to write it down. Okay. And then jumbo was 6.85. There it is. There's a summary right there. And what that does, if we look at this versus the national averages over here, 30-year fixed, 7.3, FHA, VA, right around 7. So I got those beat handily. This is really my sweet spot anyway, FHA, VA. We always crush on those govies. And then on the jumbo side, the jumbo you can see here, in the 7s, 5-1 arm, in the 7s also, and we've got it in the 6s. So doing pretty well there. Conventional, we're just kind of like everybody else. Everybody's kind of in the same boat on conventional loans, the way that they're set up, the way that they function. But we can really murder on the FHA, VA govies, and then on the jumbo arms. We've got that sweet First Citizens hookup, and they are an incredible bank from the broker side of things. Okay, so to recap, a couple things. Tomorrow, if you're in the industry, the Hive Grand Opening. It's tomorrow, Thursday, 5 to 7 p.m. in Sorrento Valley. You can look this up. Just look up on Eventbrite, the Hive Grand Opening. If you want the details, I posted a link on my social media as well. I'll be there from 5 to 7 p.m. It's going to be fun. Drinks, appetizers, hanging out, showing off the new digs. Super cool. If you're going to see some serious craziness with regard to NVIDIA tomorrow. Who knows? This thing might go up another $50 tomorrow. Who knows? But if you're not trading, if you're investing, just be careful on some of these pumps. I think this stock market pump could be short-lived. We'll see. Everything update today, 60 basis points on the rates. We just did our live look in on rates. Mortgage demand is way down. I'm super available, more available than I've ever been as a loan officer, probably. It's just the least busy I've been ever. So if you have questions about HELOCs, or if you're like, oh, I like this guy, I've just never called him because I think he's too busy. I'm not anymore. Give me a shout. And I'm always happy to help. Always happy. Even when I'm busy. In fact, when the mortgage market gets the craziest and lenders aren't returning phone calls, test me. The next market like that, test me. That's when I really excel, because I do get back to people and I always focus on communication. And so it doesn't matter how busy I am. I'll always get back to you. And then check out this blog on Redfin. I'll put that link in the YouTube description. So much good macro information here about where inventory is coming from, what places are going to get more inventory. It's really, really interesting. And we know inventory is the story that's really driving the market. Also, tomorrow, the Feds start to, convene in Jackson Hole. We're going to hear from Fed Chair Powell at 10 a.m. Eastern, so 7 a.m. on Friday. I'm looking for what he's saying about real estate, as they are 100%, in my opinion, attacking the real estate market. They're attacking the market. That's what they're doing. When they try to slow things down, they try to slow down inflation. That means slow down growth. That means get in the way. That's what they're doing. Make no mistake about it. Do not kid yourselves. They're coming guns blazing. And they have been. Now, it's nice to have 5% in your savings account. That's cool. You got a money market account with your brokerage. I've sold a lot of stuff, just because, like, well, I make 5% over here, just sitting there. Yeah, I've maintained some investments, Bitcoin, Tesla. I sold all my Meta, and have some other stuff, but you get 5%. So that's the plus side. The downside is when you go to the bank and you give them your money, you are a huge liability to them. And since most of them are reinvesting that money into the bond market, which has been obliterated, it causes banking issues. That's why we've seen banks get downgraded recently. That's why I sort of shot that warning out last week. Like, hey, I don't like the way this stuff's looking. I'm always going to be honest with you. I don't like it. I don't like the fact that banks are getting downgraded. That's not what we want to see. That doesn't help the bond market. It doesn't help the real estate market. It doesn't help the finance market in general. Also, Bitcoin sitting at support there after the liquidation. We've now confirmed BlackRock owns 12,000 coins. Robinhood just this year has accumulated $3 billion worth of Bitcoin. So there's some big players getting into the big Bitcoin game. When the ETF is approved, and I do believe that'll happen soon. Supposedly going to be this week, but sound of freedom there going above. I'm not sure if you can hear it or not. I have a good microphone, but we always call it the sound of freedom. It's very interesting times in the crypto space. Very interesting times. Everything was up today, across the board green. Check your portfolio today. It'll make you feel good, especially if you had a bad day for some reasons. The deal fell apart or something. Check your portfolio. Going to look good today. And at the end of the day, when it all comes down to it, we're here to freaking help people. I became a mortgage broker because I want to hook people up. I could easily work for a bank and my life would be so much easier. Oh, they take care of you at the bank, baby. Nice office, whatever you want, assistance. But I don't want to be a salesman for the bank. I want to hook people up, which means today it might be this bank. Tomorrow it might be that bank. Look what happens when I pull up rates, which we just did. And this is what they were, in case you missed it. Look what happens. Each time I pull it up, there's a different bank at the top. There's a different bank that's better. As a broker, I can go with whoever that better bank is. And particularly in this market, especially with people who want to refinance right now or who need to refinance right now, we'll go ahead and lock your loan, right? Lock it today, and then see what happens with the market. If rates improve, we'll go to a different bank. We'll lock at a lower rate. We'll cancel the previous lock. You can keep doing that. But you get yourself in a position so you can close. If rates are going up or they're not coming down, you can go ahead and close the deal. But we can play the market a little bit, okay? You can also do that with purchase loans too. Up until about 10 days before the closing to lock at a different bank for a lower rate, flip all the stuff over. Just flip the appraisal over, you transfer everything. Everything transfers. So right now, it's especially important to understand that and to take advantage of that. And if I were at a bank, I couldn't do that. And once you lock the rate with the bank, boy, it has to go down a lot. The market has to change a lot before they'll float it down for you. A lot. So in this case, it doesn't make any difference how much. I can switch from bank A to bank B anytime. It's beneficial to you. So there's things that you can do to sort of help yourself. And when you have those situations, it's important to take advantage of them, in my opinion. And that's the reason why I'm in this seat and not in a cushy, expensive chair in a very expensive office that my clients have to pay for, because that's how that works. If you are in the market to buy real estate right now, expect it to be difficult. Expect there to not be much on the market. Expect there to be competition when something comes. If you aren't in a situation where you're pre-approved and ready to smoke an offer with a quick close, it's a very good chance you'll get beat. I realize many people need to get beat once or twice before they get it. So it's okay. If you need to touch the hot iron and you don't want to trust your realtor or me, okay. Everyone learns at their own pace, but that is what you will learn. That is what you will find out. So if you want to have success in the real estate market, right now, the best thing to do is position yourself to be able to strike, position yourself with a loan with a mortgage broker, ideally myself, if not me, then somebody who's a mortgage broker who can help you capture the best rate, whether it's today in your initial lock or 2 weeks from now, 2 weeks before you close, when rates dip, if they do. Who knows? We don't know. But you have to be able to put yourself in a situation to capitalize on that. Otherwise, you're going to be refinancing too many times. Don't refinance too many times. You're going to refinance every 6 months on the way down. And you don't want to do that. It really eats into what savings you're going to get and when your break-even period is every time you do it. So you got to be smart about that. And I do have a particular trick that I like to use for that, to calculate it and execute at the highest possible efficiency. So here's where rates were. Just a quick recap. VA conforming balance was a 6.625, high balance 6.75. So not as bad as people think. FHA, both the conforming and high balance were 6.625. Conventional, we had conforming balance at 7.25. And this is all with no points and no lender fees, by the way. High balance was at 8.375. And we had an ARM, a conventional high balance ARM, that was at 7.5. So conventional high balance now, we're kind of looking at ARMs because, as you can see, the ARM rate is way lower than the fixed rate. Jumbo ARMs, on the 5-year ARM, 6.85. That was a 1.5 million purchase price with 20% down. There is a 10% down jumbo program still out there. The rates are up there. It's like around 8. There's still tons of bank statement programs and stuff like that out there for people who are trying to purchase that don't have like that 2-year history, is self-employed, or they're not showing very much income. That is something that we're also seeing a lot of lately. So all those things are still out there, and we're still working hard every single day, trying to make it happen for you. So if you have needs, if you have a question, I'm super available. Give me a shout, shoot me a text, whatever your flavor. I'll always shoot you straight. I promise you that. And I will always do my best to hook you up like a tow truck. It's 5 o'clock somewhere, my friends. Happy hump day. I'll be here if you need me. Be back on Friday. Talk to you then.